Alright guys, buckle up because I've got some news for you. Bitcoin is about to hit a hard time in the short term. No big price surges on the horizon. But before I dive into why, let me tell you something wild that's actually tied to Bitcoin's price. I'm talking about egg prices in the US. They have finally dropped. You might be scratching your head right now like, what do eggs have to do with Bitcoin? Stick with me. Alright, I was saying, you might remember that viral moment on Xiaohongshu, China's version of Instagram. It was a while back, when folks from the US and China had a friendly chat about prices, salaries, etc. in their countries. I did a video about that. At that time, eggs came up big time. Thanks to stuff like bird flu and crazy inflation, egg prices in the US shot up to ridiculous levels. Almost $1 per egg in some over-the-top places, And even at that price, people still couldn't get their hands on them. Meanwhile, in China, at my father-in-law's local supermarket, you can grab a dozen eggs for under $2. Even in Shanghai, Shanghai is China's most expensive city. You can snag a decent dinner with meat and veggies at a fast food for less than $2. The price gap between these two countries is just nuts. Here in New Zealand, life is very expensive too. In the past 2 days, I went to Australia, same. That's why I've got my own egg factory, as you saw. And, oh yeah, quick side note, I'm thinking about starting a community soon. If you are interested in knowing more about my life and even come here to see me, you can join me on Telegram. It's my personal Telegram, the link's in the description, and I'll drop any updates about my community there as soon as it's live. Anyway, back to the point. I'm not just here to ramble about egg prices. Why is it important for Bitcoin? What's happening with eggs reflects some bigger socio-economic issues in the world's two largest economies. And those issues are going to impact Bitcoin's price and the whole market. Take the US, for example. Those sky-high egg prices, they are a symptom of serious inflation. The good news is recent economic data like egg prices is starting to cool off these days. In February, the US CPI rose 2.8% year over year. That's the lowest it's been in a while, but it's still above the target. Core CPI went up 3.1%, which is slowing down a bit, but inflation pressure is still hanging around. The PPI, which tracks producer prices, dropped 0.1% month over month. That's a sign the pressure's easing on the production side. But it could also mean economic growth is slowing. Meanwhile, China's economy isn't exactly sunshine and rainbows either. While the world has been battling high inflation in 2024, China has been stuck in low-price mode. Basically, they are dealing with deflation. People's wallets are tight and they are not spending or consuming much. And I dug into the numbers, into the data. Chinese PPI in 2024 fell by 2.2%. It's not as bad as last year, but it's still trending down. It's like businesses are selling stuff at lower costs, but no one is buying. And now with Trump pushing tariffs and trade wars, China's economy might struggle even more to pick up speed. So picture this. The global economy is like an iceberg, slowly thawing out. The two big players, the US and China, are facing totally different challenges. The US is seeing some relief in CPI numbers but still wrestling with inflation. And China is at risk of deflation, with sluggish spending and overproduction. So yeah, these two forces crashing together, it's like a big deal for the global economy. And the crypto market isn't just tied to the US, it's a global game. If the US cuts interest rates and China keeps its loose policies going, global liquidity could spike, potentially boosting risk assets like Bitcoin. It would be great. But if it is the opposite, the US holds high rates and China tightens up, what happens? Uncertainty shoots up and risk assets could take a hit again. Bitcoin might even see a bigger drop than what we saw lately. In the short term, unless Trump or some crypto bigwig, like David Sachs, drops a massive bombshell of good news, a market rebound isn't likely. My worries are starting to play out. When panic hits, institutional investors tend to dump their holdings, and Bitcoin is no exception. From a technical standpoint, Bitcoin's already dipped below its 200-day moving average, sitting around 82.5k. That kind of drop is usually a bearish sign in the short term, and market vibes might stay weak. So yeah, there is a lot of uncertainty right now, and the charts aren't showing solid support for Bitcoin. So yes, it's the situation at the moment. But don't lose hope. Don't lose hope just yet. These are just short-term bumps. China's already rolling out stimulus moves like easing bank loan rules, cutting reserve requirements, and maybe even handing out cash to folks. That's what I heard. That could juice up liquidity and give the market a lift. Over in the US, the Fed cutting rates, it could be a game changer. Powell's not keen on it right now. Doesn't seem likely in March, according to Polymarket. But if the economy keeps softening, they might have no choice. That could open the door to new opportunities for us. So all in all, the outlook's not super rosy right now, and a quick, fast rebound doesn't seem in the cards. But think of it like waiting for the harvest on a farm or waiting for the sun during a storm. If we hang in there, the market's bound to warm up eventually. So what do? We stay patient and keep an eye out for those game-changing updates. They will spark a recovery, sooner or later. What do you think? How much is the dozen eggs where you're at? That's a good question. Tell me in the comments and what you think about Bitcoin and crypto for the next few weeks. Remember to like, subscribe, you know the drill, and merci et au revoir.